In August 2025, the game didn't just change for Ethereum, it was flipped completely upside down. While everyone was watching the price charts, mesmerized as ETH crossed $4,000, they missed the real story. They missed the quiet decision made in Washington, D.C., and the tidal wave of cash unleashed from Wall Street that, together, just unlocked a $12 trillion war chest for crypto. This isn't just another bull run. This is a fundamental rewiring of our financial system, happening right before our eyes. And in this video, we're not going to give you another simplistic Ethereum price prediction. We're going to pull back the curtain and show you the four powerful forces that are now in control of crypto's destiny, and explain why the world of digital assets will never, ever be the same again. To understand what's happening, you have to follow the money, and right now, the money is flowing like never before. The first and most powerful force reshaping Ethereum is the institutional floodgate. For years, big money, pension funds, hedge funds, corporations sat on the sidelines. Crypto was too risky, too unregulated, too complicated. That all changed with the approval of spot Ethereum ETFs. Think of an ETF, or exchange-traded fund, as a simple container. Financial giants like BlackRock buy the actual Ethereum, put it in this container, and then sell shares of that container on the stock market. For the first time, any major investor can buy exposure to ETH as easily as they buy a share of Apple or Tesla, and the result has been a tsunami of cash. In July 2025 alone, Ethereum ETFs pulled in a staggering $5.5 billion. In the first week of August, total assets in these funds blasted past the $10 billion mark. Look no further than BlackRock's iShares Ethereum Trust, ticker ETHA. It's become a black hole for capital, now managing over $12 billion in assets. On a single day, August 8th, it saw inflows of over $250 million. This isn't speculative retail money. This is the bedrock of the financial system, placing a massive calculated bet on Ethereum's future. It creates what analysts call persistent buying pressure, a constant, predictable demand that helps stabilize and drive up the price. But the ETFs were just the beginning. They were the signal, the validation that it was finally safe for the rest of the corporate world to jump in. And that brings us to companies like SharpLink Gaming. SharpLink is a NASDAQ-listed company that made a bold decision to adopt Ethereum as its primary treasury reserve asset. Instead of holding all their cash in dollars, they're holding it in ETH. In August, they raised $200 million for the sole purpose of buying more Ethereum, pushing their total holdings toward a value of over $2 billion. And if you needed any more proof that Wall Street and Ethereum are now one and the same, consider this. To lead this new strategy, SharpLink just hired a new co-CEO. His name is Joseph Chalam. His previous job? He was the head of digital assets at BlackRock, the very man who architected their multi-billion-dollar Ethereum ETF. The message is crystal clear. The experts who built the institutional gateways are now running the corporate treasuries. This creates a powerful feedback loop. ETFs drive corporate adoption, which creates more demand and higher prices, which makes the ETFs even more attractive to new investors. It's a cycle of financialization that is fundamentally changing the asset. This institutional flood is just the first of four massive forces, and if you want to understand how these forces connect and where the real power shift is happening, make sure you're subscribed and have notifications turned on, because what's coming next is the part the mainstream media is completely missing. If the institutional ETFs are the new, high-tech pipelines for Wall Street money, the second force is the one that's about to open the floodgates for Main Street. And it came directly from the White House. In August 2025, President Trump signed an executive order that could be the single most significant political event in crypto history. The order directs the Department of Labor to officially clear the way for alternative assets, including cryptocurrency, to be included in 401k retirement plans. For those outside the US, a 401k is the primary, tax-advantaged retirement savings account for tens of millions of American workers. It is the bedrock of long-term wealth creation for the average person. And for 50 years, these plans have been restricted almost exclusively to stocks and bonds. This executive order changes everything. The American retirement market holds an estimated $12 trillion in assets. By greenlighting crypto for these accounts, the government is potentially connecting this enormous pool of capital directly to assets like Ethereum. And think about how this connects to Pillar 1. The average person isn't going to set up a crypto wallet for their retirement fund. They're going to buy it through a simple, regulated fund. A fund just like the brand new spot Ethereum ETFs from BlackRock and Fidelity. You see how this works? The financial product and the political order are perfectly symbiotic. One provides the regulated vehicle, the other provides the massive new source of demand. It's a brilliant pincer movement, funneling both the world's largest institutions and the savings of everyday people into the same asset. The theoretical impact is a permanent upward shift in the baseline demand for Ethereum. It normalizes crypto as a legitimate long-term asset class. But it also comes with a profound new consideration. It exposes the retirement savings of millions of people to crypto's famous volatility. A future market crash wouldn't just be a headline. It would be a political crisis, a risk we've never had to contemplate before. So we have a flood of money from Wall Street and a green light from Washington. But why Ethereum? Why is all this capital and political will converging on this specific network? The answer lies in our third pillar, a technological renaissance. This money isn't flowing into a speculative void. It's flowing into a thriving, functional, and rapidly growing digital economy. The world of decentralized finance, or DeFi, built on top of Ethereum is booming. In 2025, the total value locked in Ethereum's DeFi protocols surged past $153 billion, a three-year high. This isn't just people trading tokens. This is a complex system of lending, borrowing, and yield-generating applications that are creating real economic value. We're seeing platforms like Pendle, which lets users trade future yields, explode to over $8 billion in value. We're seeing innovations like liquid staking allow users to secure the network and earn rewards while keeping their capital free to be used elsewhere in the DeFi ecosystem. This growth is being fueled by critical upgrades to Ethereum's core technology. The recent Pectra hard fork made the network more scalable, reduced transaction costs, and added features specifically designed to make it easier and safer for institutions to use. And we can see the results on-chain. In August, the Ethereum network had its single busiest day of transactions in its entire history, driven largely by institutions moving stablecoins. This is the fundamental difference between this rally and those of the past. It is underpinned by record-breaking usage. The technology provides the underlying value, and the financialization provides the capital. One cannot exist without the other. This brings up a huge question, and I genuinely want to know what you think. I've pinned a comment right below this video. The question is this flood of Wall Street and government involvement a good thing for crypto's soul? Go down there, vote with a like on the comment you agree with, and add your own thoughts. Let's get a real debate going. And while you're there, hitting that like button on the video tells YouTube this conversation is important and shows it to more people. The final pillar supporting this new era for Ethereum isn't about money or technology, but about something just as valuable and clarity. For years, the biggest risk hanging over the entire crypto market, besides Bitcoin, was the threat of hostile regulation from the United States. That risk dramatically decreased in August 2025 with the resolution of the SEC's multi-year lawsuit against Ripple Labs, the company behind XRP. The two parties officially dismissed their appeals, bringing a final end to one of the most consequential legal battles in crypto history. The outcome solidified a previous court ruling that XRP, a major altcoin, was not a security when sold to the public on exchanges. This was seen as a landmark victory for the entire industry. The news sent XRP's price soaring, but its impact was felt far beyond just one token. In finance, uncertainty equals risk. And for years, the regulatory uncertainty in the US was a massive wet blanket on investment. The Ripple case resolution doesn't give every altcoin a free pass, but it sets a powerful precedent and removes a significant amount of that fear from the market. This regulatory thaw effectively lowers the risk premium for investing in the entire asset class. It makes the whole Ethereum ecosystem, which is home to thousands of innovative projects like the Oracle network Chainlink, a much safer and more attractive place for capital. A healthier, less risky altcoin market directly strengthens Ethereum itself, driving more transactions and more demand for its block space. The regulatory clarity acts as a market-wide tailwind, creating the perfect calm environment for the other three forces to accelerate. So, let's bring it all together. What does this mean for the next Ethereum price prediction? It means the old models are broken. We are in a new paradigm, driven by a powerful convergence of four forces. First, you have institutional money, the financial vehicle that unlocked Wall Street's capital via the ETFs. Second, you have political will, the fuel provided by the 401k order that is opening the door for Main Street. Third, you have technological utility, the powerful engine of DeFi and network upgrades that gives the asset its fundamental value. And fourth, you have regulatory clarity, the open road created by the Ripple case resolution that makes the entire journey safer for investors. This alignment has fundamentally and permanently changed Ethereum. It is no longer an outsider asset fighting for legitimacy. It is now an integrated part of the global financial system. The question is no longer if it will be adopted, but how its new role will shape our financial future. The volatility will remain, the risks are still real, but the foundation has been rebuilt on pillars of institutional concrete. The hated rally of 2025 might just be the beginning of the most accepted, most integrated, and most powerful era in crypto history. You've made it this far, which means you're serious about understanding these deep market shifts. And the story doesn't end with Ethereum. To truly complete your understanding, you need to see our breakdown of the next wave of altcoin ETFs that are about to launch, covering everything from Solana to Chainlink. Thanks for watching.